Through aggressive sanctions, the West wants to engineer a financial crisis in Russia to pressure the country to stop the war in Ukraine. But what are the chances that other countries and economies won't be affected by cutting off the world's largest commodity producer from the global financial system?
Zero! There is a 0% chance.
When commodity producers and traders buy commodities that are either in the ground or in transit, they will short futures contracts for that commodity to hedge against declining prices. It's a way to lock in the price of a commodity, and this is done by every commodity producer and trader in the world. When prices increase, producers and traders will need to put up more margin to keep shorting the commodity. However, when commodity supplies are drastically cut off, like during the war, commodities will have extremely sharp price rises as a result. And this triggers margin calls, which make commodity prices go parabolic as producers and traders want to cover their positions and get out of their trade. In the last few weeks, we have seen drastic spikes in the price of nickel, wheat, industry metals, and natural gas, and more is to come. We've essentially removed the largest commodity producer in the world from the market, and we're leaving everyone who has previously done business with them out to dry. And when we do things like that, unforeseen things are bound to happen. And remember, for every trade, there's always a counterparty on the other side of that trade. And now no one knows what will happen to their positions. Is this a Lehman moment? In 2008, no one knew how exposed they were to collateralized debt obligations, or CDOs, which caused markets to freeze up. No one knew if their trades would clear, no one knew if they'd get their collateral back, or if they would be stuck in bankruptcy. Things froze up due to a lack of clarity. Every crisis since 1998 has looked pretty similar. Highly levered assets that are either hit by collateral going bad or liquidity drying up, or both, tends to lead to a crisis. In 1998, the hedge fund Long-Term Capital Management, with over $5 billion in assets under management, was extremely levered with Russian bonds. Even though they only had $5 billion in assets, their positions had a total value of over $1 trillion. When a financial crisis hit Russia in 1998, Long-Term Capital Management's collateral went bad, and they had to delever, and then liquidity dried up. In 2008, American banks were highly levered with mortgages as collateral, and we've all seen The Big Short. We know these mortgages weren't high quality. When defaults started to escalate, collateral went bad, banks needed to delever, and liquidity dried up. And in 2020, corporations drew on corporate credit lines, which sucked liquidity out of the funding market, and levered bond basis trades triggered a sale of a good collateral to release liquidity. Now compare this to Russia. Trade is frozen, and commodity producers / traders are short futures they can't get rid of. And futures are inherently levered. Russian commodities are now toxic across the globe, and few are willing to touch them, i.e. the collateral has gone bad. The price of Russian oil is now trading at a big discount to American oil. Producers and traders can't deliver commodities, they can't post more collateral, and they can't sell their holdings. And this doesn't only affect Russian firms, since the entire world trades commodities with Russia. It sure looks like we're walking into the classic levered trade that's hit with collateral gone bad and dried up liquidity. Things can go wrong very fast when there's a shock removal of liquidity in the markets, and this can have severe knock-on effects. And right now, there's nothing central banks can do about it. Their hands are tied because of inflation and low interest rates. Acute market stress is beginning to unfold with runaway inflation, pockets of distress, and a short squeeze in commodity prices. But how will this effectively direct you? To understand that, it's essential that you watch this next video.